Welcome back to the Deep Dive. This week, we're taking on a slightly unusual mission for you. We're not going to be focusing on, the loudest headlines or the biggest market moves.
Yeah.
Instead, this deep dive is focused squarely on uh, the most silent observation from the collection of material you shared with us. And to set the stage, this week felt quiet.
But not necessarily calm. And that distinction, I think, is the entire focus of what we need to unpack.
Exactly. We're looking at a really distinct atmospheric shift. It happened between last week, week 50, and this week, week 51.
Right.
Last week was all about this constant active friction, a sense that the world's machinery was just grinding. But this week,
It's different.
the materials all point to a noticeable reduction in the reactions to that discomfort. It's like the quietness itself is becoming a structured feature of the landscape. It's not a lack of action.
No, not at all. It's a systematic lack of response. And that's the critical lens for this whole dive. We have to try and understand that transition.
For unease, too.
Yeah. From a time when friction caused, visible unease, market jitters, loud arguments, to now where all that activity continues, but the world is just sort of absorbing it.
I mean, if you're feeling less emotionally engaged by the news this week, your sources suggest you're not alone. That desensitization is happening on a structural level.
Yeah.
So, to stick to the guidance from your sources, we are not diving into deep history or theory today. We're just going to focus on the direction things are moving.
And where that new structure of silence is really settling in, the goal is to translate these big, abstract observations into something tangible for you.
Okay, so let's start by defining that shift. When we
Yeah.
look back at W50, what was the feeling?
The defining feeling was that things were constantly moving. You had investment, planning, this constant news flow.
But nothing felt easier.
Exactly. It was an active, almost irritating friction. It was everywhere, and it was demanding attention.
And what's so unsettling is that discomfort didn't just resolve itself this week.
No.
The data confirms the movement is still there. The investment, the plans, the tech shifts.
Yeah.
All of it continued at pace. But the responses,
The social, the market, the practical responses, they just flattened out.
they became almost indifferent. It's as if the system just ran out of energy to even react anymore.
And that flat reaction is the signal. That's what we need to examine. We have to ask the question, is this just a temporary lull, or are we seeing the start of a structural hardening?
A hardening.
Your sources use the term calcification. It's just the difficulty isn't going away. It's just being cemented into the background.
Let's review the quiet facts then. The things that are still moving, even if they aren't making headlines. We know, for instance, that investment plans for AI, for semiconductors, for data centers, they're all still being updated at a high rate. The movement is there.
It is. And maybe counterintuitively, financial markets were surprisingly stable. They were often described as calm.
Calm. While at the same time, the physical constraints, the real-world problems with energy, water, logistics, labor, all of that continued to be reported.
But only fragmentarily, like disconnected symptoms that nobody is putting together.
Right. And geopolitics, too. Mostly extensions of existing policies, not big new decisions. The status quo held, even if it's stressed.
So, if you look at the density of facts, it hasn't really changed that much.
But the density of reaction to those facts,
That's what's changed. It's low. One source called it, yay.
the extension of silence.
Yes, that's the core signal of W51. It's the sound of unavoidable problems just losing their news value.
The information environment is changing its sensitivity. The high-speed world is just running ahead of its ability to even acknowledge the stress it's creating.
Which is where that directional lens comes in. The sources argue we should only look at the direction of movement. Is it accelerating, decelerating, gathering?
Right. Focus on where the speeds clash. That's how we avoid getting lost in the weeds.
And the clash point remains this fundamental speed difference. It's between the high-speed operating systems, AI, finance, military strategy, and the low-speed reality.
The reality of physical systems, resources.
Exactly. It's like trying to stream an 8K video over an old dial-up connection. The data is there, but the physical pipe just can't handle the velocity.
That's a great way to put it. So let's apply this to the three big gradients from W51. Starting with AI and infrastructure.
Okay.
The high-speed story is obvious. AI investment is moving at an ultra-fast pace. It's pushing the frontier, demanding massive infrastructure.
But the low-speed reality is that it's hitting hard limits. Data center expansion, especially in key areas, is running into critical constraints.
Water and power.
Water and power, primarily. The friction is real, but it's localized. For now.
And the silence here is what's really telling. The voice from, say, local municipalities or the actual communities dealing with these constraints, it's still described as weak.
Right. They're the ones feeling the pressure, but they haven't generated enough political noise to slow down that high-speed investment machine.
So this friction is just building up. It's likely to become a major policy problem in the medium term, maybe 1 to 3 years.
Precisely because the quietness today allows it to grow completely unchecked.
Okay, second gradient. Finance and geopolitics. The market is acting like a high-speed OS that just enforces short-term stability.
Yes, leading to reduced risk premiums. The market has entered what one source calls an abnormal quietness. It's driven by Yoon.
Nair. Just being used to the risk.
Simply being accustomed to it. The financial system is basically choosing to look away.
So wait, you're telling me the market is calm because the risks have been around so long that they're just factored out?
Not because they've been resolved, no.
That sounds completely paradoxical.
It is. The low-speed reality is that the real risks, logistics, disruptions, conflict, supply chain stress, none of that has gone away.
So the on-the-ground systems like insurance, energy, logistics,
They are demonstrably under chronic sustained load. They haven't crashed, but they are stressed to a point where one small shock could just ripple through everything.
so the stability we see in the financial numbers is an illusion. It's a numbness that's masking this slow decay in the physical layer. And the risk is that a small, connected event could become a sudden trigger. Maybe in a few months, maybe a year.
Because the market has lost its sensitivity. It's dropped its guard. It's like a brittle wire that looks perfectly fine right up until the moment it snaps.
The calm is structural numbness, not resilience.
Exactly.
Okay. And the third clash, China's economy and its oversupply problem.
Right.
The high-speed part is that their massive production operating system, once it's built, can't easily be slowed down.
Not without causing huge social and political stress. So it leads to this oversupply of goods just being pushed outward.
But the low-speed reality is that consumer demand, both inside China and globally, just isn't catching up.
And the sources point out that this is a profound failure of compatibility. It's the planned production system versus the messy reality system of how people actually live and spend.
And there's no quick fix for that.
No. The only fix is structural change, and that will take years. So this oversupply and the silence around it, it's here for the long haul.
Let's shift focus then to where this quiet structure is really settling in, the life layer. We're not seeing these huge dramatic events on the front page. What we're seeing is the quiet, slow growth of background problems. And paradoxically, they're becoming more important than the headlines because they define our day-to-day.
We're observing what the sources call quiet deterioration in the life layer. And you can feel this. It's inflation fatigue, it's rising logistics costs, it's the steady creep of insurance premiums.
These aren't shocks. They're slow, grinding pressures.
And they are shrinking the available choices for you, the listener, month after month.
And the crucial part is that this is all happening without major public protest, without the kind of market drops that signal panic. The system is just absorbing it.
And the material is really explicit here. It says this is not stability.
It's hardening or calcification.
Exactly. The problem gets absorbed as a permanent background condition. It becomes the new prerequisite for daily life.
Which connects directly to the information environment. We are just overwhelmed with commentary, endless explainers on AI, contradictory economic analyses.
It leads to what the material calls meaning fatigue. We've heard so much hype, so many warnings that our ability to process new signals, even critical ones, is just diminished.
And that's why just observing the silence, and what the sources call quiet translation, is starting to gain real value.
Explaining the meaning of the underlying conditions without the hype or the alarm, we have to look past the commentary fatigue.
So the structural narrative is this. Friction is happening all the time. But because the delays and the constraints happen over and over,
they lose their news value.
Right. The load doesn't disappear. It just becomes background noise. A new, unspoken prerequisite for daily life.
The quietness is the sound of widespread, chronic adaptation to difficulty.
Let's try to translate this then. Let's make it concrete for you. How does this silent hardening show up in, say, major cities?
Good question.
Let's start with a high-velocity city, like Tokyo. Investment, massive redevelopment plans. It's all very aggressive. High-speed movement.
But the physical constraints are there. Labor shortages, regulatory delays, they are unresolved.
And the critical observation is that The long wait times for projects are becoming normalized. The expectation of swift, seamless delivery that's quietly being violated.
And nobody's registering it as a clear failure anymore. That sense of violated expectation is the first psychological thing to go quiet during calcification.
And in local cities, it's often similar but more acute. Energy costs, labor shortages, they just persist. And since short-term fixes aren't newsworthy, the problems are visible, but they lack the momentum to get fixed.
The quietness there is just stagnation becoming the baseline.
Now, what about a place like Singapore, which manages its structure so tightly?
Well, there, external risks are actively absorbed through strong regulation and infrastructure. But that success raises the internal adjustment load significantly.
So the quietness you observe there isn't stability.
It's not synonymous with it, no. It's stability that's achieved at a high, continuous, and often hidden internal cost. The system is stable because it's perpetually adjusting to massive pressure.
Okay, so what does this all mean for daily life? For the person listening to us right now?
In daily life, it means the increase in behaviors like waiting, or giving up, or avoiding certain complex services.
Those are becoming the standard operating procedures.
Yes. The new baseline is just accepting that this much cost, this much delay is unavoidable. You start self-regulating your own expectations downward just to manage the quiet deterioration.
And what about for investment? This must signal a shift.
A subtle but important one. Value is slowly moving away from just high-growth themes. It's moving towards solving the problems of stagnation and constraints.
So things like mitigating water shortages or solving logistics bottlenecks.
Or simplifying overly complex systems. The areas where the problems are most silent, where reality has hardened the most, those might be due for a sharp reevaluation later on when the problems become too big to ignore.
The quiet areas are where the greatest unpriced risk and unacknowledged pressure is building up.
That's the idea.
Okay, let's wrap this up. This week's big realization. W51 wasn't defined by a new, loud problem.
Oh.
It was defined by the fact that reactions to existing chronic problems diminished. The world is adapting, but it's adapting through numbness.
And the sources confirm is this. High-speed, high-dependency models, AI, finance, they will inevitably hit hard resource limits in the physical world.
And the market's current quietness is that numbness. It's desensitization, not a lack of risk.
Right.
Which leaves us with critical open questions.
Yeah.
We still don't know where the first critical break will happen. Is it energy? Water? Logistics?
Or a financial trigger caused by this very complacency. And we also don't know if policy will move preemptively or only react after something breaks.
So what matters next? It may not be a major event that screams in the headline.
No.
It might be the places where nothing seems to react, or where the silence has become the thickest, most brittle structure.
Thank you for sharing your sources with us and for letting us take this deep dive. We invite you to continue exploring this knowledge with us next time on The Deep Dive.